Happy New Year. I trust you all had a great Christmas and enjoyed some of the fine New Zealand weather. I'm Sean Hannigan, Chief Investment Officer of Aurora Capital. Well, the final months of 2025 capped off a remarkable year for global markets. For the first time since the pandemic, every major asset class, from shares to bonds, delivered positive returns for the year. While much of the year was shaped by concerns over trade and tariffs, the focus shifted in the fourth quarter to the positive impact of lower interest rates and government support. Notably, this was the year that the rest of the world caught up, and for the first time in a long time, international stock markets generally outperformed the US. The New Zealand economy grew by 1.1% in quarter three, beating expectations and benefiting from the Reserve Bank lowering interest rates to 2.25%. These lower rates also helped the New Zealand share market with a rise of 1.9%. Barring any major geopolitical events, which is not an insignificant risk, we expect this recovery in our economy to continue. Europe was a standout global performer over the quarter, with shares rising 6.5% in local currency terms. Investor confidence was boosted as the European Central Bank raised its growth forecast for the year. The US economy proved surprisingly resilient, growing at 4.3% in the third quarter, well ahead of forecasts. This strength helped the market weather a difficult fourth quarter, which included the longest government shutdown in history and rising unemployment. While we saw some volatility at the year end, US stocks still gained 2.7% for the quarter in US dollar terms. The market was supported by the Fed cutting interest rates twice in the quarter, on the back of inflation falling to 2.7% in November and rising unemployment. For additional cuts, we need to see inflation weakening further, and we think this may be problematic with the impact of tariffs flowing through into pricing. So as we head into 2026, the mood is one of cautious optimism. Inflation is moving in the right direction. Governments are continuing to spend money, and major central banks seem prepared to continue to cut rates. While high prices for AI-related stocks is a risk, the fact that growth is spreading across different industries and countries is a healthy sign for your investment. Thanks very much for your time.